Coronation says its portfolios have performed well amid the market volatility, and that for the year under review, 92% of its funds exceeded their benchmarks. Assets under management rose close to 11%, supported by strong market returns, and Coronation's annual headline earnings per share more than tripled. It's rewarded shareholders with a final dividend of 228 cents, which is 38% higher than the prior period. Oceana has distanced itself from counterfeit canned pilchards, which were discovered last week during a police raid in Dale-Side, Gauteng. The groups released a statement saying investigations had confirmed that the cans were not affiliated with Lucky Star. Oceana's added that the cans appeared to have originated from an international manufacturer supplying Woolworths, and that Woolworths rejected the shipment after it failed quality control checks. Woolworths has confirmed that it's launched its own investigation. Delta Property Fund is lightening its portfolio. The firm says it's agreed to sell its Beacon Hill property in King Williamstown, and that the move forms part of its optimization strategy, which involves offloading assets that are no longer strategic. It's added that Beacon Hill, which was underperforming, was disposed of via an auction, and that the method was seen as the most efficient outcome. The proceeds of the sale will be used to reduce debt. South Africa's construction sector is under threat from the construction mafia. That's according to Deputy Finance Minister Ashor Sarupen, who was addressing the National Construction Summit in Durban today. He says more than 180 projects worth 63 billion rand have been disrupted since 2019, and that the mafia's demands for up to 30% of contract value undermined the integrity of procurement systems and also delayed critical infrastructure delivery. Nearly 50 billion rand has been withdrawn from pension funds under the two-pot system. That's since its inception in September. SARS says it has observed an unprecedented and steady increase in tax directive applications, which reflects the economic challenges faced by households. Sticking with the two-pot system, the Financial Sector Conduct Authority is probing charges imposed by pension funds and fund administrators on withdrawals. According to Matthew Parks, COSATU's parliamentary coordinator, the matter has been under review at NEDLAC. COSATU's proposed to the Treasury that caps be imposed on what pension funds can charge. A study has shown that the average fee charged by pension funds and administrators for a withdrawal sat at about 320 rand. And based on the 1.7 million withdrawals tallied, it's estimated that pension funds and administrators would have made 544 million rand since the two-pot system came into effect. Further afield, Boeing is issuing layoff notices starting this week to workers impacted by a broader plan by the heavily indebted plane maker to cut 17,000 jobs, or 10% of its global workforce. Here's more detail in this package report.
Boeing in the filing said it had sent layoff notices to over 2,500 workers in the states of Washington, Oregon, South Carolina, and Missouri. It's part of the debt-ridden plane maker's plan to trim 17,000 jobs globally, or 10% of its workforce. Those who were let go were mostly engineers, technicians, and non-union workers. The bulk of them in Washington state, where nearly 2,200 workers received notices. Layoffs varied between sections. An engineer in Boeing Defense, Space and Security told Reuters all but 2 or 3 members of his 12-person team were let go. Another said she was the only one in her roughly 20-person team to receive a layoff notice. Both said they provide vital support for production and design engineers. The company told affected workers they will stay on Boeing's payroll until January to comply with the federal 60-day notice period rule. News of cuts in November was widely expected. Boeing had said it started issuing notices last week, and another round is expected in December. The notices come as Boeing aims to restart production of its best-selling 737 MAX jet following a weeks-long strike. Strike! The stoppage ended earlier this month, having crippled much of the firm's airplane output.
And in tech news, the U.S. Department of Justice is forcing legal action against Google as it plans on asking a judge to force the company to sell off its Chrome internet browser due to its excessive control in the search market. Let's take a look at this package.
The U.S. Department of Justice will ask a judge to force Google to sell off its Chrome internet browser. That's according to a report by Bloomberg News, citing people familiar with the plans. The same judge ruled in August that Google illegally monopolized the search market, helped by the dominance of Chrome, which is estimated to control around 2/3 of the market for internet browsers. Bloomberg says the DOJ will also ask the judge to require measures covering artificial intelligence products and Google's Android smartphone operating system. The report said the government has the option to decide whether a Chrome sale is necessary at a later date if some of the other aspects of the remedy create a more competitive market. The DOJ declined to comment, while Google said the department is pushing a, quote, radical agenda that goes far beyond the legal issues in this case. It plans to appeal after the judge's final ruling, which will likely come before August. The move would be one of the most aggressive attempts by the Biden administration to curb what it alleges are big tech monopolies. Ultimately, however, the re-election of Donald Trump to the presidency could have the greatest impact over the case. 2 months before the election, Trump claimed he would prosecute Google for what he perceives as bias against him. But a month later, he questioned whether breaking up the company was a good idea.